On the Spot with Michelle Makori is brought to you by Prime XBT.
I'm Michelle Makori. Thank you for joining us. There is growing concern about the trend to de-dollarize. The US dollar has fallen from 73% of global reserves in 2001 to 58% today. And even US Treasury Secretary Janet Yellen is acknowledging that the dollar's role as a global reserve asset will continue to decline as countries seek to diversify their reserve holdings.
But isn't it the fact that the use of the dollar has diminished and gone down against competing currencies over the years?
There's been some increase in holdings of other reserve assets, but that's something to be expected in a growing world economy where there is a desire to diversify, but
so we should expect less use of the dollar, is what you're saying. We should anticipate.
We should expect over time gradually increased share of other assets in reserve holdings of countries. It's a natural desire to diversify, but the dollar is far and away the dominant reserve asset.
It's still a huge concern.
Yellen was responding to questions about the risk of de-dollarization at a Housing Financial Services Committee, where members of Congress noted increasing calls to reduce dependence on the dollar by adversaries and allies alike.
As you know, adversaries like Russia and China, Iran, North Korea, and others have been working to replace and circumvent and undermine the US dollar for decades now. But now we're also seeing calls to reduce the dependence on the US dollar from corners of the globe, including allies of ours like France and maybe India and others. Should we be more concerned now in slapping sanctions on countries around the world and taking that into consideration and be more thoughtful as we may be creating a paranoia around the world where people are looking for other currencies to do transactions?
It is true that when we impose sanctions, countries that are afraid they can be the subject of those sanctions are motivated to look for other tools other than the dollar to engage in transactions. So
but even
that's
our
something
friends
we have to accept. It is much more difficult to find other tools to make payments, other currencies, when we work jointly with
But we even
partners.
have our friends like France also looking for other currencies and pushing it.
Now, the sanctions imposed on Russia after its invasion of Ukraine and what many have called the weaponization of the dollar, including banning Moscow from the international SWIFT system, have indeed intensified calls for de-dollarization. The BRICS alliance of Brazil, Russia, India, China, and South Africa is meeting in Durban, South Africa this August to discuss developing a new reserve asset which would rival the dollar. Now, reportedly, the currency would be backed by commodities like oil, rare earths, and gold. Meanwhile, central banks around the world have increased their gold buying to historically high levels. And 20 nations have applied to join the BRICS, including Saudi Arabia, which has offered to accept currencies besides the dollar in exchange for its oil. Plus, in a surprising development, French President Emmanuel Macron has reportedly asked to attend the BRICS summit in August. France recently completed a natural gas deal with China, paid for entirely in yuan. Meanwhile, several countries are formalizing bilateral trade agreements not using the dollar. China and Brazil, South America's biggest economy, have reached a deal to trade in their own currencies, ditching the dollar as an intermediary. Argentina will pay for Chinese imports in yuan. India and Malaysia can now use the rupee to settle trade. And India has been buying oil in rubles, rupees, and dirham. These are just some recent examples of the trend to trade not using the greenback, a sentiment made very clear recently by Brazil's president.
Every night I wonder why all countries are obliged to base their trade on the dollar. Why can't we base our trade on our own currency? Why don't we make the commitment that we need a currency, that makes countries a little more at ease Because today, a country needs to chase after dollars in order to export when it could export its own currency.
But despite this, my next guest says that the US dollar is not losing its dominance anytime soon, and that an impending global sovereign debt crisis could bring a big rally in the greenback. Brent Johnson is the founder and CEO of Santiago Capital. Brent has over 2 decades of experience in finance, including as a VP at Credit Suisse, and he is famously the originator of the dollar milkshake theory. Brenton, very good to have you. Welcome to Kitco.
Thanks for having me. Happy to be here.
Thank you for joining us, Brent. And I know you have some thoughts on the desire to de-dollarize, and you say we shouldn't confuse desire with ability. But before we get into that, for those viewers who have not come across it before, break down what the dollar milkshake theory is.
Sure. Well, I think the best way to think about the dollar milkshake theory, at least the way I think about it, is that it's a framework for the way I think a sovereign debt crisis would play out. Now, I thought that we would already have a sovereign debt crisis by now due to all the debts in the world and the rise in interest rates, but it hasn't happened yet. And, perhaps I'm wrong and it will never happen. But I do think that debt has consequences. I think higher interest rates will have consequences. And I think that the world will enter a sovereign debt crisis. And the dollar milkshake theory is the way I think that would play out. And essentially, what I think happens in that scenario is that despite all the protestations to the contrary, despite all the potential desire to move away from the dollar, that when we get into a crisis, the dollar will still be seen as the cleanest dirty shirt or the port in a storm, however you want to define that. And I think investors and entities around the world will seek out dollars as a safe haven in that environment. Despite all the problems that the United States has, on a relative basis, it still looks pretty good compared to the problems that the other countries have. And the reality is there's just no alternative to the dollar. Now, I know there are other currencies out there. I know there's a lot of people that think gold could be used, and in certain circumstances it could be. But to have that come out overnight and automatically replace the dollar and have everything go smoothly, I think is a tad too optimistic. And so I think when a crisis does develop, I think capital will flow to the dollar, capital will flow to the United States, and it will create this vicious circle or vicious cycle where capital flows makes the dollar go stronger, the dollar getting stronger causes problems abroad and causes crises overseas. When those crises overseas develop, then people flock to the dollar even more, and you can really kind of get a situation where it spirals out of control.
All right. So as you say, it's an issue of being relatively strong, cleanest shirt in the dirty laundry basket. I love using that analogy, and that there isn't a real alternative at the moment. But let's unpack that further before we get into the idea of potential alternatives. What triggers the sovereign debt crisis that you see unfolding?
Well, essentially, I think a combination of a couple things. One is the growth of debt in the world. And probably don't have the time to get into it right now, but based on the design of the system has to grow. And it's a debt-based system. So every year, the debt gets bigger and bigger and bigger. If it doesn't get bigger, in other words, if more capital is not lent, if credit is not extended, what you end up having is a credit contraction. And once a credit contraction takes place, then it can kind of feed on itself. You can get into a situation like we had in 2008-9 and like we had in 2020. So I think the combination of low global growth, economic growth, and high debt, and now higher interest rates. And it's compacted or it's impacted by the fact that now we have higher inflation than we've had in years. And so the ability to counteract a credit slowdown is a little bit hampered because it's not as easy for central bankers to turn around and turn on the spigots, do QE, do stimulus, when we already have extremely high inflation that they've, for the last year and a half been desperately trying to get under control. So I think it's a combination of where we're at in the cycle, low growth, and high debt.
And as you say, tightening around the world in a bid to fight inflation, be that raising interest rates or quantitative tightening globally and in the US. Let's understand this milkshake idea. Why milkshake?
Well, a couple of reasons. I think for anybody who's been paying attention to capital markets or investments or even just monetary policy for the last 15 years, the way that the world responded to the global financial crisis was, for lack of a better word, they printed a lot of money. They increased the amount of liquidity in the system. They provided stimulus. They did bailouts. And so, but it wasn't just the United States that did get this. I think the Fed gets, kind of tarnished with a bad brush as a result. And it's not that they don't necessarily deserve it. It's just that the rest of the world did it too. The ECB, the PBOC, the Bank of Japan, the RBC, the RBA, everybody was guilty of it. So they mixed this global milkshake of liquidity. But one of the points I like to make is, because the global economy is so enmeshed now and so intertwined, is that it's not so important who prints the liquidity. What's important is who captures the liquidity. And so going back to the dollar milkshake theory and the crisis and the cleanest dirty shirt, I think as we get into a crisis, the response will be similar to what it has been in the past. Countries will do stimulus. They will print more money. They will provide liquidity to the banking system. They will be the lender of last resort, and they will create a liquidity event to try to counteract the deflationary pressures as a result of all the debt. And when that liquidity is created, I think that the United States will be the primary beneficiary of that liquidity. For lack of a better word, I think the United States will drink the rest of the world's milkshake. I got this from a movie called There Will Be Blood. And there's a scene where this ruthless oil executive is trying to negotiate a piece of land with his neighbor. And his neighbor really wants him to buy the land. And he says, if you buy my land, you can have all the oil underneath it. And his response is, well, I don't really have to buy your land, because all I have to do is stick a straw down into the ground on my side of the fence, but it goes underneath the fence and it drinks your oil. And he says, if you have a milkshake and I have a milkshake, but I put my straw in your milkshake, I drink your milkshake. And I think that's how the sovereign debt crisis will play out. I think the liquidity will be provided not just in the United States, but from all over the world. But I think the United States, for many reasons, is the one that has the biggest straw. And I think that is the way in which capital will flow to the United States.
And what is the time frame that you see this playing out over? Is this more of a short-term outlook? And by short-term, I mean next 5 years or so?
Yeah, I think and I listen, I'm the first person to raise my hand and say that I thought we would have already had this happen by now. We started to have, it's really interesting. We started to have it happen in 2020 with COVID. The interesting thing about COVID was that the world really kind of came together, for lack of a better word. And, they instituted the same policies, they provided a ton of liquidity, and they kicked the can down the road. And then last year, we started to see it a little bit as well. If you remember, in order to fight inflation, and the world was raising interest rates, and the dollar was getting a lot stronger because the Fed was raising interest rates the most. And in last fall, in August and September of last year, the ECB had to intervene in their market because Italian yields were starting to blow out, and they had to get those under control. The Bank of Japan had to intervene not only in their sovereign bond market, but also in their currency market, because it was getting out of control. And the Bank of England had to bail out their sovereign debt market because it was getting out of control. And not to forget China, who had to dramatically ease monetary policy to deal with their slowdown in their real estate sector. And so last September, we were kind of at this point where the world was on the edge of crisis. Now, to the central banks and the monetary authorities' credit, they came in and they were able to get it under control. And this is why I say I don't know exactly when this is going to happen, but I think ultimately markets are more powerful than governments and monetary authorities. And I think ultimately the markets will overpower them. And so I think it will happen in the next 5 years. But I don't know for sure. I will say I don't think that this is going to be a 1 or 2 month event. It's a big blow up and then we're on to something else. I think this is going to take, several years to play out. And there will be times where, things are good, and then we'll have a crisis, they'll get it under control, and everything will be fine for a few months, and then it'll flare up again. But I think ultimately it's probably going to be 4 or 5 years before this fully plays out.
Okay, so how does this now work in with the idea of de-dollarization and the sentiment we're saying there? Because I get what you're saying. There's going to be a liquidity crunch. There's going to be a sovereign debt crisis. There'll be a flight to safety in terms of going back to the US dollar. But a lot of the theory also assumes that a significant portion of the world will rely on the US dollar for trade. We mentioned the de-dollarization trend, and we are seeing that there is a big shift in sentiment with regards to trade. There's also a big shift in sentiment with regards to potentially paying off debt in dollars, with a lot of countries resentful of the idea that they owe the US dollars and that the US has been printing and raising the dollar, meaning that the debt that they owe the US now becomes higher and higher, which all leads into the milkshake theory and the strength of the dollar that you see. But when we have this big change in attitude, how would that play in? And I'm going to play you a soundbite from Kenya's president, William Ruto. He's been calling on African nations to shift away from using the US dollar for intracontinental trade, and to use local currencies for the purpose of buying and selling. Now, granted, Kenya is not an economic powerhouse, but we do see this growing shift in sentiment. Let's watch this clip.
Why is it necessary for us to buy things from Djibouti and pay in dollars? Why? There is no reason. And we are not against the US dollar. We just want to trade much more freely. Let us pay in US dollars what we are buying from the US. But what we are buying from Djibouti, let's use local currency. Traders in our continent can trade in their goods and services, and the Africa Exim Bank will settle payments in local currency.
Granted, this is the president of Kenya, not even the third biggest economy in Africa at the moment. I believe it slipped to number 4. But he is reflective of a general sentiment. We just played a soundbite from Brazil's president, Lula, earlier, echoing a similar sentiment. How does that play into the dollar milkshake theory?
Yeah, so the first thing I'll say is that I'm totally aware of all of this sentiment. And there's no doubt that the sentiment is against the dollar. And there's no doubt that there's an increased desire around the world to move away from the dollar. There's 2 problems with actually doing it. The first is to understand, well, let me take a step back. For people who aren't aware, there's 2 dollar markets. There's the domestic US dollar market, and then there's dollar transactions and dollars that exist outside the United States. The dollars that exist outside the United States are called euro dollars. Not to be confused with euros. It's just a dollar that circulates outside the United States. Most people know that the United States owes $31 trillion, an astronomically large number. What most people don't know is that entities outside the United States owe the same amount, if not more than the United States does, more than 32 trillion in dollars to each other. So in other words, they don't owe that money to the United States. They owe that to each other. It's a Turkish company that took out a loan from a French bank and did it in dollars. It's a Philippines, entity that took out a loan from Japan and did it in dollars. It's dollar trade between India and South Africa that takes place in dollars, and one of the vendors extended them credit. And so if and when the rest of the world were to decide that we're not going to pay off our dollar debts, that's fine, they can do that. But they won't be defaulting on the United States. They'll be defaulting on each other. So even though the debt will disappear, the assets of the rest of the world will disappear as well. And so that makes it very, very hard to actually do what the gentleman from Kenya is explaining. Now, the other point I would make is the 2 clips that were shown, one was the president of Brazil and the other was the president of Kenya. I have yet to see a business person from Kenya or Brazil come out and say, I would prefer to be paid in the Kenyan currency or the Brazilian currency. Most of them want to be paid in dollars. And the reason they want to be paid in dollars is because dollars, despite what you think about the horrible purchasing power of the dollar over time, the dollar's purchasing power tends to last better than the Brazilian real's purchasing power, or the Kenyan shilling's purchasing power, or the Turkish lira, et cetera, et cetera, et cetera. And business people know this. And so business people are the ones who are transacting in dollars. Now, one of the examples I would use is, let's pretend that tomorrow morning, Joe Biden came out and said, you know what, we really need to get away from this dollar. From now on, you guys are all going to transact using seashells. And we're going to provide you all the seashells you need. But seashells are now the currency. You don't need to transact in dollars. Now, I know that's a stupid example or kind of an extreme example, but the point is just because a president comes out and says, we think you should do this, doesn't mean the whole world or the citizens are just going to automatically say, okay, that sounds like a great idea. More times than not, the business people will push back against the policies of the governments or the monetary authorities. And the other thing I would say is the reason that Brazil and the reason that, or especially Kenya, the reason that the African nations wanted the countries, the companies and the citizens to stop using dollars is because the countries themselves need those dollars. So they want the citizens to sell their dollars to the government. The government will give them local currency. And now the government has the dollars because they need dollars to buy energy, to buy needed imports, et cetera, et cetera. So you have to be kind of careful taking, a politician's comments at face value. You really have to think through why they're saying it and what they plan to do once that change takes place.
Fair enough, and I get your point that the private sector ultimately decides what currencies will be used, but you do still have these governments saying that they're going to conduct trade between themselves as a country and other countries on the governmental level using different currencies, and we're seeing that play out. We're seeing that play out between China and Brazil, for example, moving away from the dollar and using the yuan. So even if the private sector objects to this, the fact that we have what was considered completely outrageous even 3 years ago, leaders of countries in South Africa, Southern Africa, and South America speaking out and saying, we don't want to use the dollars anymore. I mean, that is a very significant change in sentiment. So what happens on the trade side if we continue to see this trend of countries making bilateral trade agreements and not using the dollar as an intermediary?
Well, I should say that I think that will happen. I think, I can't believe I'm going to say this, but I'm going to say it. Like, I actually agree with what Janet Yellen was saying. Over time, you are going to see other countries try to do things, as their economies grow, they're going to try to diversify away from just using the dollar. Again, them being reliant on the dollar is a problem. It's a problem that I fully recognize, and it's a problem that I think is going to lead to this crisis that I'm talking about. But it's not surprising to me that countries will try to get away from it. One thing I would say is, again, let's use Argentina as an example. A couple of weeks ago, there was in the headlines going around that Argentina was no longer going to buy goods from China in dollars. They were going to buy in yuan. Well, sure. It's because they don't have any dollars. Argentina's broke. They don't have any dollars to buy the goods from China with. And so China wants to continue selling to Argentina. So China is loaning Argentina the money. And then Argentina is turning around and buying the goods back from China. So there are efforts being, and another example is Russia did a lot of business with India last year, and they did it in rupees. Well, now Russian banks are stuck with billions of dollars in rupees that they can't use or have no need for. And Sergei Lavrov, who is the Secretary of State, effectively the Secretary of State for Russia, has come out publicly and said, this is a problem. We have no use for all these rupees. And so I know there's people that say, well, they can just buy Indian goods with those rupees. Well, Russia doesn't want billions of dollars of goods from India. So again, it can be done, and these efforts will be made. But the idea that the rest of the world is just going to, come up with all these bilateral trade agreements, they're going to ditch the dollar, and that the U.S. is going to, go into a decline as a result, and the rest of the world's going to thrive, it's just not factually accurate. And I think anybody who bets on that happening is going to be in for a rude awakening.
Okay. I mean, certainly no one is rooting for it. Well, at least I'm not rooting for it. But you did mention what Yellen said about global reserve assets dwindling. And surely that does take a toll at some point. Now, I get it. You're getting rupees back for your goods, and maybe nobody wants to buy stuff with sell stuff to you with rupees, getting rupees, and I'll ultimately then have to get changed back to dollar. But when we do see this tangible decline of global reserve assets kept in dollars, What does that signal?
Well, I think, again, it signals that the world is not cooperating that it used to be. It's becoming a more fractured place. And this is partly what's going to lead to a crisis, in my opinion. And the other thing I want to make sure that I get across to people who have not heard me talk before, I do not believe that this is going to be a situation where it benefits the United States. We are out having, picnics and everything's wonderful while the rest of the world burns. I think this is going to be a crisis for everybody, including the United States. And I think ultimately it's going to be very bad for the United States and very bad for the dollar. But I think the transition from the current system to some new system, it will not be a calm transition. It will be violent. It will be violent economically, and it will probably be violent militarily. And during that transition, whatever that transition is, and whenever that transition happens, I expect it to be extremely volatile. And during that volatility, I expect the dollar to go higher. Now, on the other side of that volatility, maybe the dollar then has to get written down. Maybe it has to get, devalued. Maybe a new hegemon comes on the screen and, replaces the United States as the global power and the dollar. But I don't. The example I would use that will maybe help me make my point a little better is the Green Revolution. For years now, the world has wanted to move away from traditional carbon-based fossil fuels and move towards greener energy. And a number of governments around the world have put policies in place and mandated changes and done, stimulus and subsidies to industries to transition away. And nobody did this more than Europe. But the problem is that before that new system, that new green energy revolution was finalized and ready to go, a crisis hit. A crisis hit when Russia invaded Ukraine. And because that new system wasn't ready to go and completely replace oil and natural gas prices spiked. I think the same thing will happen when we get into this transition with the dollar. Despite all the efforts made, despite all the proclamations, there is not a new system ready to go. And I think efforts are going to be increased. I have no doubt the world is going to try to get new systems in place. But in my opinion, we're going to hit this crisis before this new system is ready to go. And when we hit this crisis, that's when I expect the dollar to do the same thing that oil and natural gas did last year. And that is, I expect it to spike. And when the dollar spikes, that causes problems for everybody. If you have any doubts about the dollar spiking causing problems, just go back and look at what happened last year around the world. It was a disaster for many economies and many countries.
So you mentioned the idea of conflict and military intervention. And part of the reason that the dollar is used is because of the military might of the United States, right? But there is a sense, perhaps that under this administration, the U.S. is not as fearsome, if you will, that there's less of an appetite for conflict, proxy wars aside. What if the countries that owe the US dollars in terms of their own debt just default or just say, we're not going to pay you in dollars, we're going to pay you in our own currency? I mean, would there be any consequences for them, do you think, in terms of the US? Is that when you think the US comes collecting with some kind of military backing behind it? If everybody defaults en masse and says, well, you know what, we're not paying you back in dollars, you can take the BRICS currency, and we'll unpack that in a little bit, or you can take our local currency. How do you anticipate the US reacting to something like that? Should the US still be feared in terms of a military intervention should there be a major shakeup with regards to the dollar?
So, two things. First of all, the rest of the world is well within their means to default. But I just want to make it clear again. If they default, they're not defaulting on the United States. They're defaulting on each other. They owe this money to each other in dollars. So it's Turkey defaulting on France. It's South Africa defaulting on India. It's Brazil defaulting on China. This is my point. Is like it's not necessarily a blow to the United States. But let's pretend that they do that.
But surely some of it is owed to the U.S.
At least, yes, correct. Some of it is to the United States, but by and large, a lot of it is owed outside the United States.
Okay.
So that aside, but let's pretend that they do that. If it's Rwanda and Kenya, I don't think necessarily the U.S. military is going to get involved. But let's pretend for a second that the 50-year agreement between Saudi Arabia and the United States were to come under jeopardy, because the current agreement is that the United States will provide, defense and protection to the royal family of Saudi Arabia, and in exchange, Saudi Arabia will price its oil in dollars, and that led to the petrodollar, right? And that's been in place for a long time. Now, let's pretend that they decide, no, we're not going to do that. We are no longer going to price oil in dollars. We are now going to price it in rubles, or we're going to price it in yuan, or whatever it is. Okay, so that means all let's pretend that actually happens, and the U.S. steps back and does nothing. I would argue that alone would be extremely volatile and chaotic just from an economic perspective, right? But let's pretend that the U.S. doesn't just step back, which I will tell you, as the hegemon, the bully on the playground, is not just going to step back and say, okay. Now, I may prefer that that's the way the world is, but that's not the way the world is. And if the 50-year agreement between the United States and Saudi Arabia ever came under serious jeopardy, I have no doubts there would be efforts made, either clandestine or overt, to stop that from happening. And during that, and let's pretend that happens, but it only lasts 2 weeks, and let's pretend that the U.S. loses. Okay, during that 2 weeks, I think the dollar spikes. During that chaos, during that transition, there is no other solution. I think the dollar goes through the roof. Now, maybe I'm wrong, but that's my belief. And that's why I say there is no transition from this system to the next system without chaos. It's nice to think that it would happen that way. I just don't believe it will be. Typically, when one reserve currency gets replaced by another, it coincides with some kind of a war or military action. I don't think it's different this time. And so, I think you have to be ready for it. I think I'm not saying that the dollar is going to be here forever and it's never going to go away. I'm just saying that I don't expect the United States to stand back and watch the dollar, which is its biggest weapon by far, just gets replaced.
Okay, so you're saying that you do see a challenge to the dollar, as every global reserve currency has been challenged through time. But whilst that challenge is playing out, that there'll be a massive surge in demand for the dollars as this conflict plays out. And this
Correct.
conflict doesn't play out over, a matter of months or weeks or what have you. It takes time to unfold. And you bring in the idea of the sovereign debt crisis that you've also explained. And sort of we see this spike in the dollar, but that, as you say, at some point, the dollar does lose its sole global reserve currency status, or king of reserve currency status.
I think it's possible. I don't expect it to happen anytime soon, but I'm the last person to say that can't happen. You absolutely have to consider that a possibility. But I just think that
we've had guests on the show that think that the dollar is going to lose its global reserve status as king of all currencies within the next in the next 10 years. In 10 years' time, the dollar will not be as prominent as it is now. It'll still be in the system, but it's certainly not going to be king. Is that what you would envision, or do you see a longer time frame?
I think 10 years, maybe I would agree with them. I think it would be at least 10 years before the U.S., unless we have some major crisis, the dollar goes to 150 or 200 or whatever it is, they come out, the world says this just isn't going to work, and they reset the system, they devalue the dollar. But again, I think that happens because the dollar rises in the meantime, not because it falls. In other words, I am not of the belief that the dollar gets inflated away, the dollar index falls versus, foreign fiat currencies, and we go into a hyperinflation and the rest of the currencies stay strong. To me, that we are not going to have hyperinflation in the U.S. dollar while the rest of the foreign currencies are holding their value.
Okay, but no hyperinflation, but a scenario that does one way or another, in about 10 years or so, see the dollar losing its dominance. Does it lose its dominance potentially to this BRICS currency? How seriously should we be taking this global reserve currency initiative by the BRICS, which again is just a theoretical idea at this point, but they are looking to have a currency backed by commodities that the members have to contribute, for example, gold, rare earths, oil. How seriously should we be seeing or taking this BRICS currency threat?
Well, I think whenever that many, the representatives of that many countries and that many people and that big of a percentage of global GDP get together, I think you have to take it seriously. So I'm not suggesting that people just ignore it. But what I am suggesting is that this proposed currency that they've drummed up again in the last couple of years, this is not a new idea. This has been around for as long as the BRICS have been around. So the BRICS were formed in 2009, actually in June of 2009. So 14 years ago, they had their first meeting in Russia. And, the communique at the end of that thing said that these countries are going to work together to increase trade, help each other out and potentially have some kind of a currency that, that they trade amongst themselves. And if you go and you look at every communique for every year since then, it says something similar. But 14 years and they still don't have anything. So again, the reality, they just don't. And I'm not trying to belittle it, but it's much, I've been saying that I would love to join the PGA Tour for as long as I can remember. I just don't have the ability to go do that, right? So again, and this is what I would say to those who think that a BRICS currency that has gold and oil as part of it, they're going to create this basket and it's going to have oil and gold in it as well. Then if you think that this is the future, then what you should do is in your portfolio, you should go buy the Brazilian real, the South African rand, the Russian ruble, the Indian rupee, and the Chinese yuan, and buy some gold and buy some oil. And there you go. You've got the new currency. And if you're right, you'll make a lot of money. But if you're not, since 2009, when the BRICS currencies were started, or when the BRICS organization was started, the yuan is about equal to the dollar where it was at the time. All the other currencies are down 50% or more versus the dollar over that time. Now, if that's the currency that you want to hold and use, then, go for it. I just don't think it's going to work out the way that most people think it's going to.
Well, granted, it does take a long time to get these things off the ground, and 14 years isn't such a long period of time when you look at major economic cycles, but point taken that it's a lot easier said than done. Perhaps you need to train more and then you can make it into the PGA, Brent.
I would love to.
I don't know what your handicap is. I don't know what level we're at right here, but maybe it's just a question of time and effort. Maybe it's also a question of time and effort for the BRICS there. But you mentioned, of course, gold and oil, and the obvious question, and I know you're a proponent of gold, is how does gold fit into this entire picture? How do you see gold rising or not rising with these developments?
Well, I think, I used to play basketball, and one of my coaches used to tell, he had a rule. He says, if you only know two things, you know how to play passing game offense and man-to-man defense. And everything else, is secondary. And that's kind of how I think of dollars and gold. Those are the two things that you have to have. Every portfolio needs to have dollars and gold. Dollars on offense and, gold's on defense. I am a huge believer in gold. I'm extremely bullish on gold over the long term. I think in my opinion, we're going to get into a situation where the dollars and gold rise together versus all other currencies. Now, when I first started saying this, people said, oh, that's impossible. But, over the last 5 years, that's exactly what's happened. The dollar's risen versus all foreign currencies, and gold's risen versus all foreign currencies, and it's risen a little bit versus the dollar. I think that will probably continue. But I think that gold will do better in foreign currencies than it will do in the dollar. And I think the system, I do think a new system is going to be necessary. And when that new system is done, I expect gold to be very, very high. Now, I don't think we're going to go back to a gold standard, but I think the reason this new system is going to come into being is because I think the dollar is going to get so strong that it wrecks the current system. And that's what you have to understand. The dollar falling allows the current system to continue operating. It's only when the dollar rises that the system comes under threat. And I think as the dollar rises and the system comes under threat, and we have all this chaos and a new monetary system is proposed, gold will be trading at $5,000 or $8,000 or whatever the number is, and it will be waving its hand saying, "Hey, look at me! I'm a good substitute." Now, I don't think the governments will agree. I don't think the governments will say, "Yeah, let's go back to the gold standard." They may be forced to. I don't think that they will willingly do it, but it doesn't matter whether they willingly do it or not. I think gold will go much, much higher as this chaos ensues.
So you're seeing gold appreciate dramatically to $5,000, even $8,000, but at the same time, the dollar becoming stronger as well, because that's not usually how it works. Usually gold rises because it's priced in dollars relative to a weaker dollar. But in the scenario that you're painting, gold is higher alongside a stronger dollar.
That's exactly right. And again, I know it sounds counterintuitive, but it's actually fairly simple if you think about it. If you doubt me, go look up gold and look at it in all the foreign currencies over the last 5 years. And then go and look at the dollar versus foreign currencies over the last 5 years. The charts will look similar. The dollar will have outperformed all the other currencies, and gold will have outperformed all the other currencies. And now gold will have outperformed the dollar, which is fine. That means, but dollars and gold are rising versus all the other foreign. And the reason is this is because, again, the theory is that we're going to get into this crisis and the world is going to have to flood the world with liquidity. They're going to have to make more money, right? They're going to have to do more QE. And so when that happens, real things may be rising versus all foreign currencies against the dollar. It's just that they will be rising versus other currencies more than they will be rising versus the dollar. And I think you will have periods of time as this happens where you will have these vicious drawdowns along the way. And the reason is because of the design of the system. The dollar underlies everything in the global economic system. So as the dollar gets stronger, it puts deflationary pressure. And if another country or another company cannot get dollars to fund their operations, that becomes a default, right? And so this is exactly kind of what we had last year, right? As the dollar was rising versus other currencies, these other currencies, were falling in value. Inflation was worse overseas than it was in the United States. Look at Turkey. Turkey has inflation of 80 or 90%. Russia has inflation of 15 or 20%. Again, I'm not saying that the U.S. doesn't have problems. The U.S. has an enormous amount of problems. But on a relative basis, because of, again, it's not necessarily deserved either. I'm not saying that this should happen this way. This isn't fair. I'm not claiming that this is the way it should be. I'm just saying this is the way it is, and that those who think that the U.S. is going to, go into this heap of ashes because, we've been profligate spenders and we can never pay off our debt, should take a look around at the other countries and see the situation that they're in.
Right. Back to cleanest shirt in the dirty laundry basket. You mentioned a new system. A global monetary reset is what many are calling for, and they are saying that this will come in the form of central bank digital currencies, perhaps even one global central bank digital currency. We don't need to wade into that bigger theory at this point, but how do you see the concept of a CBDC, a central bank digital currency, feature into this discussion? And again, that is a form of fiat that central banks would issue digitally, which would allow governments to monitor every transaction that people make, and that the currency would also be programmable, allowing governments to dictate when the currency will and will not be used. How do you see CBDCs fitting into this picture?
Well, unfortunately, I see them fitting into the picture. I don't. This is not my preference. I would like this not to happen, but I think it's going to happen. In many ways, money has been digital for decades anyway. This is just the next step. I think in many ways, the private sector showed the power of digital currencies. Governments don't like competition, but they saw the advantages of having these digital currencies. And I think that they are going to co-opt the work that the private sector has done. I think that they are going to issue, and many countries have already said they're going to do it. This isn't like some grand theory that I've come up with. It's kind of mainstream.
114 countries are actively developing a CBDC, according to the Atlantic Council. The controversial part is whether there'll be just a one global currency. That's the part that we're, still has some people calling a conspiracy theory. But the fact that CBDCs are being developed is not a conspiracy theory at all. It's factually happening as we speak. So you do see that happening, but how does that play in with all of this? Does the dollar strengthen that you predict just take the form of a strong dollar as in the CBDC way?
Well, I think as we move forward in time, these central bank digital currencies will get rolled out. Whether they get rolled out before the crisis or during the crisis or after the crisis, I'm not smart enough to know that. I just think that they're inevitable. But my guess is, again, whatever system comes after this system, again, I think we're going to have this crisis. I think they're going to have to revamp the system in some way. And I think when we get to the other side and this new system comes online, I think it will be at least partially a central bank digital currency. I wish, the interesting thing in many ways is that, the digital currencies were created as an effort of decentralization, of getting away from state-controlled money, right? Unfortunately, what I think is going to happen, and again, I always have to say this is not what I want to happen, it's just what I think is going to happen.
I hear you.
I think what's going to happen is these central bank digital currencies are actually going to lead to more centralized power as opposed to less centralized power.
Well, sure, because they're central bank digital currencies and they're coming from central authorities, whereas Bitcoin is decentralized. So that's the antithesis of what's going to happen with these governments if they start to launch these digital currencies, which, as we just discussed, is perhaps inevitable and actively being pursued by over 114 countries. So how does one position oneself for this crisis that you see unfolding? Is there any, and I know you don't give investment advice per se, but what would be the smart way to sort of prepare or hedge for this scenario where you see the dollar spiking, but then at some point subsiding when we have this reset?
Well, the first thing I'll say is I don't think you should go all in on any one thing. If anybody tells you that they have the single silver bullet answer, run the other way. I don't have the silver bullet answer, and neither does anybody else. So don't put all your money into one idea. What I do think is everybody, and the other thing is don't be certain that you're right. I'm not certain that I'm right, and I will be okay if I'm wrong. But I talk to a lot of people who are just convinced that this is the answer, or that's the answer, et cetera, et cetera. Now, I think to get through what we have coming, you're going to have to keep a very open mind and not be certain about anything. And so along those lines, I think you should be diversified. This sort of depends on where you live, whether you're a U.S. citizen, a Canadian citizen, or live somewhere else around the world. But in general, I think you should have some cash in your portfolio, preferably U.S. dollars as cash as opposed to some other currency. I think everybody should have gold in their portfolio. To not have, there's really no downside to owning gold. And I think in the years ahead, you'll be very glad you own some. Now, I also think that you should own U.S. equities. I don't think you should run out and put everything in U.S. equities. And in fact, I think they're at a level right now where we're going to get a correction. If you have equities, maybe hedge them or maybe take a little bit off the table. But I think in the years ahead, as we get further into the crisis, I think sovereign bonds are going to get sold because of the counterparty risk associated with them. And when that happens, I think U.S. large cap equities are going to largely replace sovereign bonds. I know that sounds very kind of counterintuitive, but that's how I think this crisis will play out, because I think more money will get injected into the system. That money will have to flow somewhere. I think it will flow into U.S. dollars and then ultimately into U.S. equities. And then finally, I think, land has typically been a great investment if you can hold on to it. So it kind of depends on where you're located and what kind of a government regime you live under. But I would not be all in on anything right now. I think having some kind of a combination of cash, gold, equities, and real estate is probably a good idea for now. And then if we see some kind of a big crash or there's some big opportunity where something is completely mispriced, then you have that cash to be able to go and maybe take advantage of that.
Right, dry powder. You did mention you see a market correction very quickly as we wrap up here. We've spoken very long term. Let's bring it back to more near term stuff. We did hear from Fed Chair Jerome Powell again today, reaffirming that more interest rate increases are likely ahead as inflation is still, as he says, well above where it should be. What do you see happening with regards to Fed and interest rate hikes in the next 6 months or so, and the market correction that you think is possible?
Well, I think we're going to get a mini correction, at least maybe 5 to 10%. And I don't think a 5 or 10% correction would bother the Fed. I mean, think about it. Equities, the markets are almost back to their all-time highs. The market now is at the same level it was when they started raising interest rates a little over a year ago. So they've been able to raise interest rates 5%, and the equity market hasn't crashed. Now, I'm not saying that it won't, right? And so I actually think things have gotten ahead of themselves. I think we're going to get a 5 or 10% pullback at least. And I expect the Fed to still raise rates. Now, if we get a bigger crash than that, I mean, if the market just finally says no mas and is down 20%, 25%, then all bets are off. The Fed is going to pivot, and they will probably not just not raise rates, but they may even start cutting rates. But I think it's going to take a market event for them to do that. I don't think that they're just going to out of the blue, stop raising rates. I don't think, unless we have a market crash, I don't think that the last interest rate hike was the last one. I fully expect them to raise again in July. And if the markets allow them to do it, I expect them to raise again. Now, I'm not necessarily saying that that's what they should do, but that's my expectation.
Okay, and you see the markets after the second rate hike, after this one, potentially start to show some signs of craving under pressure then?
I think so. And again, I think the crisis that I foresee, I think it could start overseas. It doesn't necessarily have to start in the United States.
Okay, well, we've also got the banking crisis, to anticipate in this whole scenario here. And that's been one of the concerns, that if the Fed continues to tighten, we're going to see more collapses in the banking sector. Any thoughts on that?
Well, unfortunately, I think we're going to see more failures in the banking sector. I think small and regional banks are in a lot of trouble. 10 or 15 years ago, I think there was something like 14,000 banks in the United States, and that's been whittled down to around 4,000 or 5,000 now. I expect that trend will continue and perhaps even pick up pace. With the amount of, the expenses now for all the rules and the regulations and the compliance, spending that kind of money that's necessary to run a bank is a much bigger percent of profits for small and regional banks than it is for the big, money center banks. And I think that the competition will just kind of over time drive them out of business. And if they don't go out of business, I expect some of them to fail because of deposit flight. And then not only that, but, in order to pay for these bank bailouts that we've already have, they're going to raise FDIC fees. Well, again, it's the big jumbo banks that are able to, absorb those kind of increased FDIC fees better than the small, community and regional banks. So I expect that to continue. And, it'll be interesting to see what happens the next time they let one go and don't bail it out.
Right. And how do you expect gold to move in response to this then?
Yeah, I think so. Gold has kind of gold has been kind of flat for the year. Silver's down. The miners are down. We're kind of getting into the period of time, though, where they typically have a pretty good third quarter. At some point in the third quarter, I think they typically bottom over the summer, and then they get some kind of a rally. I think we're probably getting close to that. I am planning to buy gold for clients over the next month, regardless of what price it is. We just got a dollar cost average into it. And so I think I think gold's at like 1940 or 1950 today. Whether I'm buying it at 1950 or 1900 or 2000, I don't know yet. But I think that for anybody who owns gold, I would definitely hold on to it. And anybody who's looking to add, I wouldn't wait too long to do it.
Okay. Well, Brent, I look forward to seeing you on the PGA sometime soon.
Me too.
Lots of desire should not be confused with ability. I like that that line. I may have to co-opt it. Thank you so much. Really appreciate you joining us today.
Thanks for having me.
All right, Brent Johnson, founder and CEO of Santiago Capital. Thanks again. And as always, thank you for watching. A big thanks to our sponsors, Prime XBT. For our viewers, there is a special offer with Prime XBT in the description of this video, so make sure to check it out. And make sure to check us out again soon. I'm 𝗫𝗿𝗶𝗺 from me and the rest of the team. We'll see you soon.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.